Welcome back to another episode of On Deck with Haversine Funding. I'm your host, Nolan Reichert. Today we have joined by us our co-host, Jeff Whaley. Jeff, how are you doing?
I'm good. Thanks for having me. It's nice to be out at Haversine. I always joke about Haversine Studios, but no, I appreciate it. So I'm really excited about this. This will be a fun one.
Yeah, it's great to have you back, Jeff.
Thanks.
I promised our viewers that you would be back, and by high demand, here you are. Today we have a very special guest. We have Tim Stute, who's currently at the Hovde Group. Tim manages the #1 ranked M&A practice to the commercial finance sector, closing 30-plus transactions in his time there. He has over 20 years of experience providing capital markets and M&A advisory to the financial institution sector with a focus on specialty finance, so factoring, ABL, now equipment, and more. In his earlier years, Tim was a top-ranked senior banker in the specialty finance M&A sector when he was at Houlihan Lokey and previously at Milestone Advisors. Tim, I kind of took the thunder from you, but thank you so much for joining us.
Thanks for having me, guys. It's a pleasure to be with you.
Yeah.
So, Tim, when we were talking internally and getting ready for this, I was talking to Jen, and she said when we were talking about you specifically, so we were talking about you kind of in prep for this. She mentioned kind of when you were getting started in what you're doing right now, and a lot of kind of the kind of, not for lack of a better term, grunt work or door-to-door work when you were getting started. And she didn't tell me the whole story. She gave me an overview, but I wanted to make sure to ask you about that, like right off the bat. Kind of tell me about that process of you really getting started in the investment banking side of this industry.
Yeah, I mean, my story is kind of maybe a little different. When I graduated from college in the late '90s, I started with one of these 65-person analyst classes with First Union, the bank that then became Wachovia and is now part of Wells Fargo post financial crisis. There were 60 plus analysts from schools around the country, and I kind of showed up on my first day of work not knowing what exactly I was going to be doing, other than I was going to be doing capital markets and investment banking work. And we were at like a cocktail party that evening on our first day on the top floor of the First Union building in Charlotte, and a guy carrying a Post-it note came over to me, looked at my name tag, and he said, "Oh, you're one of mine." I said, "Oh, what does that mean?" And it turns out that he was a managing director in the Financial Institutions Group, and that's when that was the fateful day that I became a guy focused on the financial services sector. But of course, back then I was a 22-year-old who really knew nothing, but I was able to get my feet wet doing a lot of deals, mostly for insurance companies back then, to be honest. But I was able to parlay that into an opportunity to join a brand new investment bank that got started here in the DC area, which is where I'm still located today, for a small shop called Milestone Advisors that was started by a couple of guys that came out of another DC area firm at the time, Friedman Billings Ramsey. And I came in as the first grunt employee back then, and was doing the whole 80 to 100 hour work weeks. But what was great about it was I had some really good mentors at the time, and so I think I probably ended up putting 6 years of learning into 2 or 3 years. And I think the part that Jen is maybe referencing is, after doing that for a few years, I then said, "Hey, I want to go out there and start building my own client base." And so I literally, this was like, just about 20 years ago now, actually, I started dialing for dollars and actually went to my first IFA factoring conference in, it was either '04 or '05. And I cold called a bunch of people, telling them about an M&A deal we had just closed in the sector, and just was like, literally, it was the classic dialing for dollars, talking to anyone who would take my call, and ended up setting up a bunch of meetings. And as some say, that the rest is history. We ended up kind of ultimately leading to some engagements that led to closed deals. And next thing you know, I was a specialty finance guy that was doing M&A deals in the factoring and ABL sector.
That's fantastic. I mean, I love that. I mean, that's probably a story you can really identify with, Nolan.
Yeah, I mean that's very inspirational. You know, it seemed like you just kind of fell into, started out from just a post-it note you said, and someone said you're my guy, but you really took ownership of it and ran with it and built a name for yourself. Definitely wasn't easy, it sounds like. So, did you have a moment early on in your career when you decided this is it, this is where I want to plant my feet, this is something that I want to do, until the future? Was there a moment like that that stood out for you?
Well, so I think what was going on, I kind of, when I was in that world of working long hours, building a lot of financial models, writing presentation after presentation, and doing all that work that you really need to do to learn the ropes and learn the sector that you're focusing on. I was studying the senior guys that I worked for and trying to see what they did every day and how they went about trying to market to clients, get those clients to want to, or prospects, I guess I should say, get those prospects to want to hire us at the time at Milestone. And I thought to myself, I think I can do that. I think I can go out and talk about the things that we're up to and the successes we've had here at our firm, and maybe I can be a senior banker. And so I think the moment was more or less just sitting there 20 years ago saying, like, okay, I've kind of had it on all this modeling and living in PowerPoint, Word, and Excel 24/7. Maybe I
You
can
didn't
go
enjoy
out there.
that?
I remind you, I'm an accountant. You're talking to an accountant here who still lives in
Yeah.
Excel.
And Jeff, where would we be without people like you? I mean, thank you for all that you do.
Oh,
But I was kind of ready to try my hand at maybe taking on a little bit more responsibility and trying my hand at bringing in deals. And so I think I sat there one day and I looked around at the senior guys at the firm, and honestly, the reason I ended up choosing factoring / ABL, and to be fair, we do a lot of work in the equipment finance space and with various types of small business lenders as well. But just kind of gearing this a little bit more towards what's probably most of your audience, guys, the ABL and factoring stuff. I honestly kind of sat there, and first I looked at the senior guys at Milestone and I said, well, none of these guys are really dedicating a huge amount of their time to those sectors. So I can kind of go out there and it's kind of like a blank slate for me as a guy trying to build my own path. And then knowing that I'm not the smartest guy around, I looked around and said, geez, there's really no other investment bank that's spending a lot of time in this world based on what I can tell. And so that was kind of the moment or my thesis as to why I felt like, hey, let's give this a try. And then true to form, like I can think back to going to some of these conferences for the first time and meeting a bunch of people. And the reason they were willing to meet with me is because it had occurred to them that they had never been called on by anyone like me. And so even though I was pretty young at the time, because as you guys know, I'm only 30 right now. Right. So back when I was 10, starting my time in this space, they were like, who is this idiot? Like, let's see what he has to say. But I came in, I said, hey, did you hear about that company that sold? Like, oh yeah, I know the principals there. Like, yeah, we were the ones that put that deal together. And people were like, wait, what? Like that, you guys focus on this, and like you played a role, and that enabled us to kind of educate, and it really did kind of snowball from there. With plenty of trials and tribulations, no doubt, but it ended up working out nicely where one thing led to another, and we were starting to close some good deals for good companies.
I mean, and just to kind of interject, I mean, one of the things we've worked together, obviously, and looked at a few deals together, Tim. And I mean, one of the things, and he talks about being buried in the models. I think he's a little bit modest on that. I think one of the things I've always appreciated about working with Tim is that, I mean, he gets the soft skills, like he talks about going out and talking to people, right? But that's not at the expense of the numbers. As I think when I look at, investment bankers as a group and M&A as a group, I mean, it takes a rare mix of skills to get the soft skills and presenting and going out and talking to people, but also have a really good grasp of the numbers and the metrics. And I mean, I think from our time working with you, that's one of the things I've really grown to appreciate about working with you so far.
Thanks, Jeff. I mean, look. I mean, the numbers, the numbers are important. I mean, one of my mentors taught me long ago that at the core of investment banking, you need to have a grasp on ideas, generating ideas, and then you have to have the relationships to take those ideas to. But you're right that kind of the foundation of it all does come back to the math, to the modeling. So I'm not nearly as skilled as maybe I used to be and working my way around Excel shortcuts. But the good news is that I've got a team of folks outside my door that know how to do all that dirty work.
That's key right there. I'm always knocking on his door, asking him how to do this, that. So I'm right there with you, Tim. You definitely made a name for yourself, and it sounds like it was, a dedicated effort. You really had these trials and tribulations, and you put your head down and made a name for yourself. Being in the senior position that you are now, what is some advice that you would give to the younger generation or people that are looking up to you, people that you may be mentoring? What's a piece of advice that you could share with them?
Yeah, it's a good question. I mean, I think a lot of this is common sense, but I really try to just operate every day with, one, just having integrity, especially not to say that integrity and building trust isn't important in everyone's life and professional life, but for what I do, what me and my colleagues do, where we're handling very sensitive data, even just the sensitive information of a company that is for sale. No one's going to talk to a guy like me if they think I'm going to go out there and blab about it in the market. So you really just have to operate with the utmost integrity and be trustworthy and honest. I pride myself on trying to be pretty straightforward and not pull punches. There's things we have to be careful about as registered representatives of a FINRA regulated broker dealer. Obviously, there's plenty of rules and laws that are important on a daily basis, but beyond that, I don't want people to waste their time. I don't want people to go on some wild goose chase when they don't have to. So I want to be straightforward and as transparent as I can be. And I think that people ultimately, once they see that I am really being honest with what I'm telling them, I think they appreciate that. But the other thing that I think is important too, and this really is common sense, but it's shocking how often you don't see this. Just be nice, be a friendly person. Just go around, and I mean, I definitely at this point in my career subscribe to the old no a-hole rule. I mean, it's just life's too short, and we all deal with people that are very difficult, and navigating that whole situation of difficult personalities can be an art that's really important, blended with the science of what we do every day. But if you just approach people in a kind, friendly way, that's a pretty easy way to build a relationship with someone. And not everyone operates like that.
Exactly. Yeah. And that goes far. I mean, at the core of it, we're all stuck here. So being kind and building those relationships is, I focus on that day to day, just because I I am driven by relationships. That's what drives me is making that connection, being able to help, and being in your seat. You're really making an impact. So I think it's awesome that is a focus of yours, and it is something that people do tend to overlook, and it's important. And I definitely appreciate that side of you. As Jeff had said, we've had the pleasure to get to know you. Him maybe longer than me, but even in my short time of getting to know you, I was telling Jeff before this, when we're recording these, no matter how many times we do it, you're still a little bit tense and, nervous, want everything to go good. And I was telling Jeff, in my short time knowing you, I just felt like we'd known each other. I felt natural. So, just to kind of toot your horn, I do really think you do a great job of that relationship building and building that trust with people. It's an art that you have.
Thanks, Nolan. It means a lot since I've known you for, I think, 8 minutes now. Just kidding.
So changing gears a little bit, one of the things whenever we go to conferences, it's always, whenever you go to a conference, it's always interesting because you're in a seminar, and it's tough because you always have people who are on their phones, on their laptops, or things like that. But it's always fascinating when you come to the podium, how that everyone stands up straight and listens. So now that we have you here, it'd be remiss if we didn't really start to kind of pick your brain about the industry and about where we're at right now. So I'll start off with a really kind of a very open-ended, kind of nebulous question. But when you look at the past year, I mean, we're starting obviously 2024, but when you look at the latter half of 2023 and the beginning of this year so far, are there any particular trends that you're seeing in asset-based lending that you think are kind of remarkable or unique or worth commenting on?
Yeah, I mean, I'd say when you sit in the seat that I sit in every day, you do see financial information for a lot of different companies. So you can piece together some trends with maybe a little bit more detail than the casual observer might be able to. And I would say what sticks out to me is not a lot of loan growth, just kind of stagnant from that perspective. I feel like the first half of last year showed a little bit more promise as far as maybe loans falling out of banks and there being a greater opportunity for the non-bank commercial finance world to pick up some outstandings in that way. I feel like that was starting, and then all of a sudden, the second half of the year, that really wasn't the case. I've talked to very few companies that experienced any kind of organic growth last year, period, let alone meaningful growth. On the credit quality side, I think that one of the reasons why the rising rate environment, the rapidly rising interest rate environment, hasn't resulted in a significant amount of distress is because credit quality has by and large remained shockingly resilient. That being said, I feel like when folks are being honest with us, they're admitting that maybe the number of loans on their internal watch list is maybe a little more numerous than it had been a year ago.
Yeah. Okay.
I feel like the instances of default are picking up a little bit, but we haven't yet seen it rise to the level of substantially increased charge-offs. And again, I'm commenting specific to your question, Jeff, in ABL, and I would love factoring in there too. There's pockets out there, commercial real estate perhaps being number one on the list, where the trends are a good bit different naturally. But in this particular world, there's many companies that I would say would tell you that the credit quality in their portfolio is no worse than it was, say, in late 2019 before we went into the pandemic.
Right.
So I think that's really an area in my mind to keep an eye on. I think when you look at the rest of this year, seeing where credit quality ultimately goes, seeing how many small business borrowers that were maybe able to stay ahead of the rising rate environment, maybe those rising rates catch up to them and you start to see more instances of losses. that in turn could end up leading to more M&A. So we'll see where that goes. But I think those are the big things. And as a result of lack of loan growth, lack of real distress in this market, that is one of those are a couple of the factors that led to a little less M&A volume. We were fortunate enough to still stay pretty busy and close some good deals over the course of the last 12, 13 months. But we were lucky in that regard. There weren't a lot of transactions that closed, but we were able to do more than our fair share of them, which is great. But some of those factors contributed to a little bit of a slowdown in M&A volume.
I mean, and that fits a lot with kind of what I'm seeing. I mean, generally when I go to seminars, it's very interesting because people talk about, obviously inflation is a continuing issue, although I mean it appears to have slackened somewhat. But essentially labor costs, at least payrolls seem to be increasing a little bit to keep ahead of inflation. And the question comes, and I think you're alluding to it with some of the more watch accounts, is how long does that phenomenon keep up? Do payrolls stay ahead of inflation? Because if they stop, that's when you're going to start to see a lot more of that stress and credit risk going forward. So I think what you're seeing is really kind of consistent with a lot of what we're seeing in portfolios as well.
I would agree.
One question, I mean, and again, you talk about kind of flagging volumes as far as M&A activity. In my impression of this is we're seeing flagging volumes M&A activity, but we're still seeing valuations staying pretty consistent or even better perhaps than they were even prior to COVID. I mean, what are you seeing? Is that consistent kind of with what you're seeing in the space?
Yeah, I mean, that's why the adjective I keep using to describe the current M&A market is uneven, because you have all these unknowns. You have the unknowns on credit quality. Maybe we don't have the unknown of how much higher rates are going to go, but we certainly have the unknown of if and when they're going to start coming down. But when you kind of look at the overall M&A market, as I said a minute ago, there's very clear reasons why it's been a little slower. But to your point, Jeff, you look at some of these transactions that we were fortunate enough to have a role in, the valuation metrics were so good that you could have easily mistaken yourself for, waking up in, like you said, maybe 2022 when M&A really started to take off again post-COVID. Or, you might even think it's 06, early 07 before the financial crisis. So I think that the reason for that is when you look at a few of these deals, and I'll highlight a couple specifically that we were involved in, take Paychex acquiring Alternate Capital Solutions last year. Yeah. In that situation, we ran a sale process in a very challenging environment that happened to coincide with all those bank failures last spring. So that's sprinkling in some bank failures is, believe it or not really great for a sell side M&A process, it turns out. So that had a little bit of an impact on what we were doing. But with Paychex, we had a buyer there that was just really motivated to add a business that had gained scale in a clean credit quality manner with a fantastic senior team that they felt could continue to grow the business and ultimately take advantage of incremental deal flow that'll come off of the Paychex platform. So they were just motivated to find the right deal at the right time, and they paid a very fair price for the business. If you look at Republic Business Credit, a little over a year ago now, they were acquired by Renaissance Bank. Similar kind of thing where Renaissance had done some acquisitions, recent acquisitions in specialty finance, and they learned quickly that it was a market that they wanted to get deeper into, and they wanted a larger platform that they felt like could scale, that had the right team. And we came along with Republic at the right time. And even though interest rates were starting to climb rapidly as we were coming down the stretch on that transaction, Renaissance was just, they stayed true to the deal and closed the transaction because they knew that the timing was probably good to add that kind of a discipline to hopefully be able to take advantage of some of the dislocation in the commercial lending environment that has since unfolded and will continue to unfold. So the valuation comment is right on. It's just that some of these sellers, I think, were able to still get to really nice valuations because of getting paired up with the right buyer at the right time.
And I think what you're getting at, and I think this leads in kind of the next thing we want to talk about a little bit, is it really feels like that people and platform kind of wins out over even portfolio when it comes to these acquisitions. Having a strong process, strong platform is what really a lot of buyers are looking at. And so again, changing gears a little bit, I think what may be of a little bit of interest to people, to a lot of the viewers of this podcast or listeners of the podcast, as it were. If someone is watching you talk and they're like, well, this is interesting, maybe I need to look into some type of transaction, and perhaps they're maybe on the sell side. I guess and again, I always view these processes, if you decide you want to sell, and correct me if I'm wrong, it's not something you're going to decide to do today and it's going to happen in 3 weeks. I mean, these are things that happen over quarters and years as far as prepping. So I guess the question I would have is, if you're talking to someone and they come to you and say, hey, I'm really looking to exit, what do they need to do to prepare to get to that point? What do they need to do internally with processes, with reporting? What are the things that you feel like are really the most value added traits that they can provide to a potential buyer?
Yeah, another good question. I mean, the fact of the matter is, while this will come off as a little self-serving, it's really never too soon to be planning for that ultimate exit, even if that exit is 5, 10 plus years down the line, because there are things that you want to do to make sure that you're just institutionalizing the business as much as reasonably possible. I think that the two things in my mind that are always going to be the A1 and A2 value drivers for a specialty commercial finance company is going to be the quality of the team, really obviously that senior team, and your track record of credit quality. There's other very important things, scalability. Do you have a good technology that can help you scale? The length of the track record, how has the business performed in times of market turmoil? All these things are important, but the valuations, the best valuations we've seen have been for companies that have a demonstrated lengthy track record of low charge-offs and a rock star team that is excited about staying on with the business post-sale. So things like building out the team, having a succession plan thought through, continuing to bring people up through the organization, all very important. On the reporting side, you can kind of take different reports and modify them as needed, but having just going back, as long as possible with the same good detailed reports, whether on the portfolio, financial statements, different key performance metrics, all that kind of thing, that's really important too. You want to be able to just show that you're organized, that you have ready access to key data points. All of that makes a difference. So in my view, the reason I say it's never too soon to be thinking about it is you might just want to kind of have a little bit of a temperature check on how you're doing, how you manage your business day to day, and get a few pointers from guys like us that know what the buyer universe looks for.
Right. And that was kind of, my next question for our viewers or listeners that, may have been thinking about it, whether they're on the buy side or sell side. What does that process look like? So they reach out to you, you can kind of give them that temperature check. Hey, this is where things stand, and provide your knowledge in the market and the industry, and your experience in this sector, specialty finance specifically, where you can give the proper feedback. Is that what does that process look like, really?
Yeah, there's no exact way that it has to go, but I will tell you that we will talk to anybody and everybody, whether that's a prospective seller or a prospective buyer, and we will try to help educate everyone as best as possible. And so if that means talking to a buyer to learn about what their interests are, what they're looking for as far as the size of a target, the industry of the target, the geography of the target, things like that, we have those conversations all the time, and then we try to be helpful and bring ideas, or at least include you in our processes when we're working on the sell side. If you're a prospective seller, again, whether that's today, tomorrow, or 10 years from now, we'd love to learn about the business at the right time, when it's comfortable for the prospect, get under a non-disclosure agreement, look at the business a little bit, look at the numbers, try to give an idea of what we think the market would bear for value, update that analysis many times over many years as needed to just keep that education process going. We have a number of folks that we do that for, just to kind of continue to build the relationship and keep the education going. So, do we have folks that we all of a sudden get introduced to out of nowhere, and they've decided they want to sell, and we can demonstrate a track record of being pretty successful at it? And so we get signed up and we go, yeah, that happens. But it also happens where we're talking to companies that I first met 10 or 15 years ago, and we're keeping tabs on their performance and giving them real-time updates of what we think the market would bear for the business, so that they can try to pick the right time to make that decision to go to market.
Right, like those transactions you gave us examples with, timing was a huge factor in those. And I think that's really helpful for some of our listeners or watchers who, I know they're having these conversations, and one of the questions they may be asking themselves is, well, what step one do I start? And it's kind of helpful putting that out there that, you may not be ready right now, but it's always great to start having those conversations and planning for the future.
Exactly.
Yeah. So kind of shifting gears to some takeaways. Do you have any just takeaways, tidbits, words of advice? It could be professionally or personally, that you would want our viewers to walk away with, like they're in this room with you.
Yeah, I don't have any kind of motto I live by or anything like that, if I'm being honest. But I think that the key to success, at least from a professional perspective, maybe from a personal perspective as well, is just to stay hungry, but also stay humble. And there's a lot of opportunity, as I think my story proves, in my little career I've had over here in this one corner of the world, where, contrary to popular belief, I didn't grow up wanting to either be a professional athlete or a specialty finance investment banker, but here we are. And through hard work and determination, you can make stuff happen. But I think it's kind of like my comment a few minutes ago about just being friendly and approachable. I really think it behooves us to be humble and always be learning. And every company that I find that I meet in this sector, even though everyone's doing about the same kind of thing, their businesses can be very different, whether that's the way they manage the day-to-day, or the way their capital structure is put together, or countless other differences. So you're always learning, you're always seeing something new. And I think you embrace that, you be thankful for the opportunity to meet a new business and learn about a new business and build new relationships. And so I always just go into conversations with folks as an eager mind looking to learn more and keep that friendly attitude and be loyal to the people that you've met over the years.
Mhm. Thank you for those. Those are some great takeaways, some good words of advice, and just general great principles to live by. Tim, the pleasure was definitely ours to have you on today. Being newer in the industry, you provided a lot of information that was new to me as well. So I'm sure our viewers and listeners are going to have a lot to take away from this. Thank you so much for joining us. Jeff, thank you for co-hosting with me
Thanks
today.
for having me. Appreciate it. Enjoyed
Asking
it.
all the hard-hitting questions.
No problem.
For our viewers and listeners, remember to stay informed, stay inspired, and stay on course to growing your financial platform. We're out with another episode of On Deck with Haversine Funding. Until next time.